Let's be honest, the world of money can feel, well, pretty overwhelming, right? Today, we're going to cut through all that noise from the stock market and break down the simple, powerful rules you can actually use to build your own financial foundation. Seriously, no matter what the headlines are screaming about. Just imagine hearing those words from your financial advisor. That sudden knot in your stomach, that feeling of panic. The whole complex world of finance, which usually feels so abstract, suddenly gets very, very real. And maybe a little dangerous. So let's start right in the middle of it, a market that feels like it's in total freefall. To figure out how to navigate this, we first need to get a clear picture of what that chaos actually looks like. Okay, so you hear on the news the NASDAQ is down. What does that really mean? Well, that's a big red flag for tech stocks. And the Dow Jones? Think of it as a report card for 30 of the biggest companies in the US. When it's down, the whole market feels it. But the part that hits closest to home, your portfolio, your collection of investments, could suddenly be worth half of what it was. It can happen that fast. Before we can even think about building a solid plan, we have to speak the language, right? Knowing these key terms is really the first step to taking back control from all that chaos.
So first up is your portfolio. The easiest way to think about it is like a basket. It's just the container that holds all your different financial eggs, your stocks, your bonds, the whole shebang. When people talk about their investments, this is what they're talking about. What's in the basket?
You'll hear these animal terms all the time. The market really has two main moods. A bull market is like a charging bull. It's strong, it's aggressive, and it's pushing prices way up. And a bear market? Well, that's the complete opposite. It's like a hibernating bear. The market's sluggish, slow, and prices are falling. It's all about momentum. High-yield trash bonds. This is the classic risk versus reward scenario. That high-yield part sounds amazing, promising you big returns, but that trash bond part, that's your warning label. The risk is pretty straightforward. The company or person selling it might just not be able to pay you back. And this brings up a fundamental question every single investor has to ask themselves. Yeah, the potential for a huge payoff is tempting, but it comes with a very real chance of losing your money. Deciding if that's a bet you're willing to make, that's a really personal choice. Liquidity. In the simplest terms, liquidity is about having options. It's cash or stuff you can turn into cash really fast. When a market is tumbling, having that cash on hand gives you a ton of power. The power to buy up great deals or just make a strategic retreat.
You know, this might be one of the toughest decisions in all of investing. Cutting your losses means selling an investment that's just not working. You have to accept the money you've already lost, but you stop the bleeding. It's a painful move for sure, but sometimes it's absolutely necessary.
All right, so we've decoded the jargon. We've looked the financial storm in the eye. Now let's do a complete pivot. Let's go from the chaos of the market to the calm of personal control. We're going to look at a simple but really powerful framework that puts you in the driver's seat. You know, it all boils down to these 5 principles. Forget about complicated charts and market predictions for a minute. This is all about building a rock-solid foundation, one step at a time. This is your personal roadmap from financial uncertainty to success. And here it is, the absolute bedrock of all of it. Rule number 1, you have to spend less than you earn. It doesn't matter how much or how little you make. If you don't master this one simple habit, none of the other steps are even possible. Setting a chunk of that income aside, that's the first move you gotta make. Next up, your emergency fund. Seriously, think of this as your financial shield. Life is totally unpredictable, right? Cars break down, you get a surprise medical bill. This fund is what protects your long-term goals from getting completely derailed by short-term problems. It keeps you out of debt when things go wrong. Now, this might just be the most important rule of them all. Before you even think about putting a dime into stocks or bonds, the single best investment you can possibly make is in yourself. Master your craft. Get better at what you do. Why? Because it directly fuels your ability to nail the next step. See? That investment in yourself leads directly to earning more money. You can make that critical shift from just trading your time for a fixed wage to getting paid for your value and your output. That is how you blow the lid off your income potential. Okay, let's get to the final and I'd say most powerful step. This is where we see how everything we've talked about so far comes together. This is where you really start to accelerate your journey toward financial freedom. And here we are, create passive income. Once those first 4 rules start generating extra money for you, you put that money to work. It could be property, a side business, whatever. The goal is to build systems where your money is earning more money for you, even when you're not actively working. So, at the end of the day, that's the choice, isn't it? You can follow these foundational rules and stop being a victim of market chaos, and instead become the master of your own financial destiny. You can shift from just reacting to scary news to actually creating your own success story. The only question left is, are you ready to be the boss?